Hey, it's Ryan from the Option Income Advisor, and this is the trade of the day for July 21st, 2021. And today we're going to talk about a stock that we finally get to trade in the triple income wheel strategy, and that is Nvidia. Probably one of the best tech stocks out there. Certainly one of the strongest trends that we've seen out there. A lot of growth prospects for this business, but it's been a stock that we really couldn't trade as well with the triple income wheel because of its high stock price. So it just split 4 for 1, and you can see here we've got now a price below 200, which fits nicely within our triple income wheel. Remember, we sell puts, which is 100 shares per contract. So if we were to sell one contract at the $800 price that it traded at yesterday, it'd take 80,000 of capital if you want to do it on a cash secured basis. And we tend to only invest up to 5% of capital in any one trade. So this being below 20,000, certainly it'd be 20,000 per contract. So that kind of gets us down to a level we can trade. So pretty excited to talk about this stock today. This is another one of those stocks that, again, high growth stocks that we believe you can turn into income. So these are stocks that we can't ignore, right? As income investors, we tend to focus more on dividend stocks, which dividend stocks work very well with the strategy, as we pointed out. But you can't ignore these high growth stocks because in some cases you can get much more income from these stocks than you can even from trading this triple income wheel on dividend stocks. And so we'll kind of talk about that a little bit. I love the risk reward of growth stocks. They tend to be in strong uptrends, which is again phenomenal for the triple income wheel. We're potentially buying on pullbacks, but giving ourselves that margin of safety. And it just works really well with the growth stock. So let's get into talking about some of the details here. So we always look at these rankings high level, and again, kind of like we talked about with some of these other stocks on this kind of growth for income list. Some rank very low on, say, value or safety. This one happens to rank high on safety, and we'll see why. I mean, the growth in sales and EPS has been ridiculous. But from a value perspective, look, it's trading at high valuation. It just is what it is. I mean, when you're in high growth segments of the technology sector like Nvidia is, you're probably going to trade at a high multiple, which this company does. So if you were doing a screen just purely based on value, you would certainly this stock would not show up on your list. Same for dividend. If you're only searching for high dividend yields, again, this stock's not going to show up on your list either. So just two things to caveat there. But I love the high safety rating, and we'll get into that. And I also love the high liquidity, and we'll see these options extremely liquid, extremely just the ease of trading this stock from an option standpoint is phenomenal. I'm so glad that they split for this reason alone, and we'll see how many opportunities and different options we have available for us to trade. But we're looking at a strike zone of 140 to 162. Which is a margin of safety of about 13% right now. And so the factors driving that required margin of safety, again, our volatility and risk. This is a higher volatility stock. It's been in a strong uptrend, but it has certainly been volatile. It does have large pullbacks from time to time. So the mean implied volatility right now is about 47%. And we've got a pullback indicator of 3. So it has pulled back about 11% from its high. But man, this run that we've had, and I'm going to pull up the chart here in a second, but this run that we've had just over the last couple months has been just insane. So a little correction off that level is not a bad thing. Again, this is the type of stock that and the type of opportunity we want to sell a put into, right? We want to sell into weakness. but we love it when it's in a strong uptrend. So if we can sell a put into weakness while still in a strong uptrend, I think that's the best, overall scenario for us in general. And it does report in the next 30 days. So our August option, which we're going to be looking at, certainly does have some EPS risk in there as well, which we don't mind taking because we'll get the higher premium. And again, kind of the goal of this stock is, right at a level where we're going to get nice premium. But certainly we don't mind if we own this one, and we'll get into some of those reasons here in a minute. So let's pull up the chart. We'll take a look at that first. So you can see this uptrend, just absolutely incredible. You won't see too many charts like this where it's had this strong of an uptrend for this long. And again, it's the sectors that they're in. This company literally has its hands and chips, right? So this is a chip manufacturer, if you're not familiar with Nvidia, but they make chips for some of the strongest segments in technology, and I think it's going to be the highest growth segments in the next 5 years. So between gaming, cryptocurrency mining, and just 5G, they make a lot of, they've got artificial intelligence programs for 5G. Just those are the segments you want to be in. And so it's not surprising that you see, a big uptrend like this. And so what we're looking at just from a, technical perspective, you've got the simple 50-day and 200-day moving averages here, right? And so you can see, how much this stock has come up, just in the last couple years, and certainly benefited from the pandemic. It was certainly a stock that did well during the pandemic. A lot of again, cryptocurrencies certainly took off during that period. Gaming was huge, and obviously 5G rollout was right there too. And so this is all things driving this strong uptrend. But you can see here, we've tested, and this is what you want to see, right? We've tested that 200-day moving average multiple times and gotten support. That is a sign of a very good, strong uptrend. You've got your 50-day, continuing to maintain above the 200-day. So I really like seeing that kind of stuff, and I love seeing good breakouts. So, it traded in a range for, about 6 months here almost, where we couldn't really break out, and so we tried to break out here. You can see, but this is right during that kind of tech growth scare that we've kind of been talking about when we've looked at these names this week. And so it almost became kind of a little bit of a failed breakout. And so in hindsight, obviously hindsight's 2020, but in hindsight, it was really this growth scare that caused this stock to sell off, along with the rest of the tech sector. And, didn't really sell off as much as most stocks did. A lot of these stocks got hit, 30 to 50%, whereas this one sold off maybe 15 or 20%. And then we got the real breakout, just kind of in kind of late May here. And this was a real breakout. So this is the type of breakout you like to see. I mean, this was massive. Just continued to just rise and rise and rise after we broke out. So I'd love to see that kind of breakout, right? And so we've pulled back a little bit here. We've had some weakness in one of their main growth segments. It's not as big of a revenue driver as some of these other segments, but the cryptocurrency segment obviously has been hit quite a bit, just because all these cryptocurrencies, Bitcoin included. They're in huge downtrends right now. A lot of the stuff going on in China where they're banning cryptocurrencies, things like that, has caused a shakeup in that industry. But I'm a true believer, and that's a topic for a different video. But I'm a long-term believer in cryptocurrency and certainly Bitcoin. So I think again, this is going to be a buying opportunity if you really get a sell-off in a stock like this. Because of that, look, it's not even that big of a piece of its revenue right now, but it has the potential to be, a really big segment in the future. So, we've had some sell-off here. And so the levels I'm looking at, if we look at our 50-day, We're right around 175. And then we've got this breakout level, which is 160, which I think that level will hold. I mean, when you get big breakouts like this, you tend to have some really nice support at that breakout level, true breakouts. And so I think we'll get some support there. And then we've got the 200-day, which has obviously been a really strong level of support. And as we continue to kind of creep higher, I think that 200-day will kind of move up towards this 150 level. It's right around 146 right now. So between 145-ish and call it 175, I think you've got some real strong levels of support there. And it would take a incredible just downtrend and negative catalyst to be able to break through all three of those. And I just don't see that happening for a business like this. So again, I think we may get additional volatility on the downside, but this is absolutely, I think, a buy, and certainly would not mind owning that stock, right? And so, this is one of those, big kind of high level, things we look at when we find stocks we want to write puts on and we want to do in the triple income wheel. This is one that I truly believe in long term, so that's something that is important. Certainly to me as I write puts, and this one certainly fits that bill. So let's take a look at again, valuation, of one. This is, if I want to just briefly touch on this, I mean, you can see look, there's no way around it. It's a highly valued stock, but the bigger question is, does it represent the future growth of the business? And I would say yes. I believe that's the case. And you can already see the difference. And granted, this year is a huge. So their fiscal year ends in January. So January 2021 would be their fiscal year 2021, and so this 2022 year is really taken off. I mean, we've got you're up about 130% in EPS, right? And so some of that is COVID related stuff, but they are projected to certainly stay in this range up here. So it's not like something that's going to drop precipitously, like some industries that have pulled forward some sales. This is a stock that has benefited, so you're not going to see this type of growth, but all the analysts out there are certainly expecting growth to continue, right? So you'll probably see a much short or you're going to see a growth trajectory that's lower in the future, but you're still going to see a growth trajectory from here, which is good, right? So when you look at these forward multiples, yes, they seem high, but again, I can't stress it enough with this business, just how many of the big, truly high growth segments that this company is involved in. It just makes a ton of sense, again, to be involved in this business. You can kind of see just how stable their quarterly sales and EPS are as well. So these are charts that you love to see as an investor. These are the charts that you want to get behind. These are the charts that really warrant a high multiple to begin with. And so that just, again, it just kind of gives you comfort with kind of making this trade, even though you've got this, low value rating. I think it's something, again, you've got to overlook a little bit, but I think it's warranted. So that's kind of our sales and EPS analysis there, and it's something I love to see. So here's let's go ahead and take a look at the cash secured puts. So this is what I was talking about earlier. I mean, you can just see they've got so many different opportunities here. We are looking at the August 20th, and so you literally have, because of the split, I mean, you almost have dollar increments on a $200 stock, which is pretty incredible. So you really have a ton of different options to choose from. And so I'm kind of looking at, again, for the kind of base strategy, where we are looking for that 1% per month, there's lots of options available. So, I will kind of point out, this is one where if you did want to not take the earnings risk, you can kind of see, and I want to show this to you, and again, I can't stress enough that our strike zone takes into account the earnings risk. So you should feel comfortable with the extra margin of safety we've got in there in the strike zone as we take into account the earnings risk. But you can see, if we took, for example, this 160, that was the weekly option that expires the week before they report earnings. So you can see, yes, it's in the strike zone, but there is no earnings risk. And so kind of just compare that just in your mind as we scroll down. So you can get about 0.8%. You've got the 14% margin of safety, again, a delta of 10. So, again, the likelihood of it trading down to like this type of level prior to earnings is pretty low. And you could maybe go up to the 165, which gets you a 1.3%. Again, a little bit less margin of safety, and then the 15 delta. So that's an option. I don't tend to trade weekly options, but I may from time to time look at the weekly options. Just again, it gives you different combinations of earnings risk and strike zones and things like that. So this one's out of the strike zone. So now just keep those in mind as we kind of scroll down, because the one I'm really looking at for our base strategy is the 160 level that has earnings risk, right? So we're going to be looking at this one here. Okay, we've got earnings risk. We've got it's in the strike zone, which is good. And then we've got 1.2 average monthly yield. We've got that 14% margin of safety. But look, we only got a 14 delta down here. So that's why I like this one. Again, assuming our strike zone is taken into account the proper margin of safety here. Stock's already pulled back 11%. We've got an additional 14% margin of safety, which is definitely more than this stock tends to move during earnings. And so, look, I expect this earnings call to be very positive for this business anyway. So I like this 1.2%. I like the fact that it's in the strike zone. I like the low delta here. I think this is a really, really good risk reward for a stock like this. And, again, I'm so excited to be able to trade this stock with this strategy without having to worry about the $800 stock price. This is going to add, we always talk about building this master list of stocks. This has to be in your master list. This is a stock that you're going to want to continue to go to time after time over the next probably 3 to 5 years and write puts on, and that's a given. So get this on your master list if it's not already. Again, you can add it by putting just adding it to the watch list from above, or adding some of these options to your watch list. But this is our base one we're going to look at, and then for the aggressive. Look, you could probably even go up to like the 170, and that gives us over 2% average monthly yield. It still gives us about a 9% margin of safety, and a delta of 24. A delta 24 with this kind of yield, is still a pretty low delta. Again, it is out of the strike zone, but we have that earnings risk. But I do like this for the aggressive strategy. I just like that risk reward. And again, business like this, if it drops to 170, can it drop below that? Absolutely. That's above, some of those support levels that we talked about. But I could very, very well see in that hold through earnings if we report well. And then I'm going to get rid of these just for a second so we can scroll down a little further, and you can just see how many options are available. It's incredible, right? And this is again why you just have to have this on your watch list, because with this level of liquidity, mixed with the volatility, mixed with the fact that it's just a phenomenal company, it's you've got to have this one on your radar. So the conservative play, we're gonna say probably this 150. Again, anytime we get below 10 on our delta, it's great for our conservative play. It gives us that, our minimum for the margin of safety, and average monthly yield is our average monthly yield is 0.7, or our 0.5 is our minimum. This one gives us 0.7, so this is right in the wheelhouse for a conservative play. Big margin of safety, almost 20%, and again that low delta. So this one will work very well for our conservative. So those are our plays for Nvidia. Again, it's got to be on your master watch list. You got to have it on there. This is just I think this split has just been a phenomenal just addition for the triple income wheel. Just because it just adds a great company for us to trade. And so we're looking at the 150 for the conservative, the 160 for the base, and then the 170 for the aggressive. That's our trade. Take care.